Thank you guys so much for tuning into today's live stream. Today is June 3rd, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So we do have JOLTS job openings here at 9 a.m. Central Time. And I mean, nothing really else here for today, right? This JOLTS jobs opening is essentially, it measures how much the job openings there has been in the reported month. So yeah, so it measures the number of job openings during the reported month, excluding the farming industry. Let's see here. So job creation can be why traders care. It's a important leading indicator of consumer spending, which accounts for majority of the overall economic activity. It's released late but can impact the market because job openings are a leading indicator of overall employment. Yep. But yeah, so forecasted is 7.11 million jobs to be released, or I guess to be open. But there was this one thing that I was kind of watching, they're not really watching, but just drawn towards, is this, whatchamacallit, interest, so interest payments to the GDP and overall current expenditure, so overall government spending, right? And it looks like 3% of our GDP goes to interest payments, just literally paying back the debt, right? Debt plus the interest payments. So so it doesn't even I don't think this interest payments, this might not even be the overall principal. This could just be the interest payments, which is yeah, that changes actually a lot. That's kind of interesting. So total public debt. I believe this right here is just essentially us paying back the interest, not even the principal amount itself. Oh man, well yeah, this doesn't seem to be too good. I want to see what net debt is. I'm gonna add net debt into here. Whoa, what the? Total public debt? What is... I think this includes household debt too, but I just want to see what government debt is. First, oh. That's interesting. 36.4. That's a lot of debt. My God, did you guys hear that? That's interesting. Real GDP should be up here somewhere. I don't know why it's so like where is it at? I don't know. I don't know. I don't know why is it so low. Well, just know that GDP debt is greater than our GDP. We are running a deficit for sure. But to kind of, I guess, take a look at the actual economic technicals here for today. So this was the daily candle previously, right? This was yesterday's daily candle, and with the way that we closed here on that specific candle, right, I am anticipating for us to take out that daily high, which would be my daily objective here. So I'm favoring for prices to take out this daily high here, and let's take a look at what happens here during the London session. So previous day highs might draw of liquidity, right? You guys may have seen my live stream yesterday, but on the monthly time frame, I am bullish. So based on that monthly candle, I am anticipating for us to take out that candle's high, which is the monthly high. So I'm bullish for the entirety of June, right? Unless the weekly tells me otherwise, I'm gonna be bullish here, and I really want to see us take out this monthly high. And so to backtrack here to the daily time frame, like I said, the daily candle here from yesterday was suggesting that today we should take out the daily high, and on the 1 hour time frame, here you guys can see that at 4 a.m. we retraced back into a 10-hour fair value gap. And there's that 10-hour fair value gap. And let's take a look at what we do here. So we rebalanced into this inefficiency, right? We respect this inefficiency, and then we begin to climb higher. We respect it, we take out previous day high, and on NQ or on ES, we failed to take out previous day high. So there is a SMT divergence here right now between NQ and ES at previous day high. So NQ, we taken out previous day high, whereas ES, we did not. So this could lead to lower prices, but I would actually wait until 10 a.m. Eastern time, or I guess, yeah, 10 a.m. Eastern time, to see if we actually take out previous day high or not on ES. But as of right now, there is a SMT divergence. it's kind of cool to see this kind of play out, right? Because this was my bias coming into today. And yeah, I mean, we rebalanced into this 10-hour fair value gap. We respected the fair value gap, and then we drew towards the draw of liquidity, which was the daily high. And after completing the daily objective, I don't necessarily have anything else. I don't want to force an objective here onto prices, right? Coming into the morning, my best bet is to utilize the 8-hour time frame and the 4-hour time frame for a intraday bias, right? So once these two candles closes, I'll either target the 4-hour high or the 4-hour low. Really just depends on how we close, because every single candle has an objective, right? But yeah, so that's my morning objective. Daily objective has already been completed, which was kind of cool to see. It was also a part of the 2-day time frame as well, which is interesting. And yeah, I mean, we're still trading around. We're basically hovering around the yearly open right now, which is that blue dotted line. So that blue dotted line is the yearly open. If we trade below the blue line, then that would be the best buys based on the yearly time frame. And if we're above the yearly open, this would be the best sells here in this area. Just keep that in mind. And yeah, I mean, I'll just wait for about another 15 minutes or so for us to close on the 4-hour time frame and the 8-hour time frame before I really confirm a bias. But yeah, so there's something interesting. I do want to go over some of the pros and cons here with you guys before those candles closes, just so I can get them out of the way. And I do this in every single one of my live streams where I go over the pros and cons. It just helps me stay consistent. It helps me stay disciplined with the approach that I have. And yeah. All right, so from the pros and cons here from last week, the first thing that I want to go over is to continue to take consistent trades, right? I have an approach where I require 3 things every single time I do before pressing the button, which is require a higher time frame objective, a model. So I always require a higher time frame objective, which is essentially the bigger reason for why prices should be continuing in a specific direction. A model is how I'm actually going to align the lower time frames with the higher time frames, and third, which is an entry pattern. All 3 of those components I require before pressing the button, and me actually requiring those 3 components helps me remain consistent. And then the second pro here coming into this week is to utilize a model, to actually use a model to align myself with the higher time frame order flow. Sometimes I'll have I wouldn't say clear, but I have a directional bias based off of the higher time frame, right? And I won't have a model. If I don't have a model to align myself with the higher time frame order flow, there is no need for me to force a trade, right? I don't need to press the button. If I don't have a model, then I'm not going to do anything. I'm just going to sit on my hands and wait until all three of those components that I just mentioned before to be present. And this just prevents me from, taking any losing or just any unnecessary trades. It makes no sense for me to force anything if my components aren't there, right? And another aspect of aligning your model with your higher time frame objective is to actually go from page 1, page 2, page 3. So what I mean by that is, if your higher time frame objective, right, is, let's say, on the 10-day time frame, then your model should be based off of maybe the daily, the 2-day. You can't go from the 10-day order flow all the way down onto the 1 minute. Like I said before, it's like reading page 1 and skipping all the way to page 50, right? You're gonna miss out on like 49 pages worth of information. You don't know if there's been new characters that have been introduced. You don't know any of the plot line, any of the development that has happened, right? But if you go from one time frame and then you go on to another time frame respective to that time frame, then there's more correlation and there's more alignment, right? So you can use the 4-hour as your higher time frame objective, and then your model could be based off of the hourly time frame. And then from the hourly time frame model, your entry pattern could be on the 15-minute time frame. That's just an example, but this happens on every single time frame, and you have to utilize the fractality of prices, but you have to understand that going from page 1 all the way to page 50 is not the way that you should read a book, and that's not the way that you should approach trading as well. You don't want to go from the weekly onto the monthly, onto the 1 minute, right? So utilize time frames, but use them in proportionate to the previous time frame. The third thing that I do want to mention for the pros is to utilize SMT, right? SMT is essentially an indicator that shows you where there has been manipulation. It's not an indicator as in like VWAP, and it's literally you comparing one asset to another. So I am comparing NQ to ES, and they pretty much should be trading in tandem, right? If ES goes higher, NQ should go higher. If ES goes lower, NQ should go lower. And here you can see that they have pretty much about the same highs and lows, but there's specific point in times where there is manipulation, right? One indice is going to take out a high, whereas the other indice doesn't. So in this case, like I kind of drawn your attention towards this morning, ES has failed to take out previous day high. It hasn't taken out previous day high yet. So for right now, there is a SMT. If we do get a reversal, then that's something that usually follows up whenever there is SMT. And yeah, use SMT to your advantage. So if there's a lack of SMT, if there's no SMT, then you can anticipate for prices to continue in that direction. If there is SMT, then you might want to consider not taking a trade at all, or if you are in a trade, move your stops to break even, right? And this is from the basis that a strong swing low and swing high will always be accompanied with SMT. So if you know that swing high is going to stay intact, right? That means you can't, if you're not going to target a strong swing high and swing low because it's a strong swing high and swing low, if you know that a strong swing high will always be accompanied with SMT, then why force a trade when there is SMT, that if there's SMT present, right? Last point but not least is to know when to pivot. So kind of like I did in the morning, where I said that because the daily objective, which was the daily high, has been completed, there's no point for me to force a trade based off of the daily time frame, right? It's that objective has already been completed. The only way that you can use the daily time frame again is if another daily candle closes, and you have to wait 24 hours for a daily candle to close. So, if you're a one-trick pony and you use only one time frame, then you're gonna have to wait. You're gonna have to wait the time interval for that specific time frame to create a candle, right? So if you're a one-trick pony on the 4-hour time frame, then you're gonna have to utilize, or you're gonna have to wait 4 hours for every single 4-hour candle. But like I said, prices is fractal, time is fractal, so you can utilize basically every single time frame. For me, I don't like going on the time frames below the 15-minute for my model. The 15 minutes the lowest I'll go for a model and for a higher time frame objective. But what I mean by pivot is, so because the daily time frame, its objective has been completed, I'm going to pivot onto utilizing the 4-hour candle, utilizing the 8-hour candle, like I'm going to do coming into the morning session today. If the 4-hour and the 8-hour candle has been completed, what am I going to do? I'm going to pivot once again onto the 1-hour time frame, onto the 30, 15-minute, etc. And if I have no time frames to use, let's just say like I've already used the 15-minute time frame, that's the lowest I could go. I'm gonna have to wait. I'm gonna have to wait for a new daily candle to close. I'm gonna have to wait for a new 4-hour candle to close, and that's kind of utilizing time frames to your advantage, right? So even if and one thing I do want to mention is that even if the hourly candle is suggesting for lower prices, or let's just say that this daily candle, it's suggesting higher prices, right? I can't use this daily candle to target like a yearly high, which would be like up here, right? You have to understand that a daily candle only can be created within a day. A yearly candle, it has 12 months worth of trading, 365 days worth of trading for it to be created. So there's going to be a lot more range in a 12-month candle in comparison to a daily candle, right? It's so you can't frame for us to take out the yearly high based off of the daily time frame. That's like using a penny to buy something that's worth 25 cents. You have to use a quarter in order to purchase that 25-cent purchase or product, whatever. You can't use a quarter to buy something that's worth $1. You need to use $1 for you to buy that $1 product, right? And that's pretty much all of the pros here. Some of the cons is is for me to be active, right? There's gonna be an opportunity every single 15 minutes because the lowest time frame that I'll go for a model and an objective is the 15-minute time frame. So every single 15-minute interval, there will be an objective. And the second thing that I do want to just work on is complete a comparison analysis for Walmart, and that Tinker's wrong. So I was able to complete that comparison analysis here yesterday. So Walmart, I compared Walmart to a bunch of things, which I don't know is good, but here's Walmart. I use Amazon, CVS, Costco, Walgreens, Kroger, Target, Albertsons, Dollar General, Dollar Tree, and eBay. eBay and Amazon I have highlighted as in yellow because they're not really stores that you go to in person. They're more of online stores. I guess you can compare the Walmart online shopping to the Amazon, but I don't think there's a separate thing that you can do for Walmart online and in person. But yeah, I did compare Walmart to those companies, and with the implied price that I got using the average of all of those companies, my implied EV, enterprise value over revenue, share price was $107, which is a little bit above what we are trading at right now in Walmart, which is $99, 99.84, which you can just round up to $100. Enterprise value to EBITDA is $62, and the PE ratio is $48. So it just gradually declines, but I think this is all right. I think I would actually I'm actually gonna do a DCF model for Walmart today to kind of come up with a share price that makes sense, because I don't want to just use I don't want to just use comp analysis, right? I want to combine that with a DCF model and see what we are doing. But yeah, so there's the 10 o'clock open, and let's just take a look at, so I'm going to replay because we did complete the 4-hour objective, but let's just pretend we did it. So this is the way that we closed here on the 4-hour candle and the 8-hour candle. With the way that we closed, the easiest assumption to make, right, is that the next 4-hour candle and the next 8-hour candle, we should take out their respective highs. Another simple way of approaching this is that this 4-hour and 8-hour candle closure is where that blue line is, and the low of the 4-hour candle is, I'm going to make it a purple line. So I'm going to ask you this: is the blue line closer to the green line, or is the blue line closer to the purple line? If you have eyes, your answer should have been that the blue line is closer to the green line. And this is just a general outline, right? You're not going to force a trade. You can't force a trade based off of this knowledge alone. This is what I mean by you can't utilize just the higher time frame objective. You need a model to support this idea, right? That's aligned with this order flow. And so, yeah, so this correlates to that. This correlates to me understanding that within the next 4 hours, we should take out this 4-hour high. That's just the bare minimum objective for me. That's the low-hanging fruit, right? And so I'm going to close the instant replay and just see what we did. As soon as we opened up on this next candle, right, on this next 4-hour candle, we didn't even manipulate lower. as like usually tends to prices, there's always going to be the open. We manipulate lower, which is us, I guess, retracing into some sort of fair value gap on the lower time frames. And this is where I want to be buyers. If I'm bullish, I want to be a buyer below the open. And so we open, manipulated lower, but in this case we didn't. But tends to, we always create the low, create the high. We manipulate lower, and then we expand it towards the 4-hour high. And that is us completing the objective, right? So that's pretty much but yeah, that's us doing the open, low, high, close. Like I said, the morning objective was for us to take out the 4-hour high. And because we already done that, I'm not going to force. What am I going to do? I'm going to pivot, right? And to, I guess, finish off today's, actually, some of the improvements are essentially a summary of the pros and cons here. So if I get copyrighted, that's not. I'm gonna just lower my mic. Can you guys still hear me? Hopefully. So, the improvements, right? So they're basically a summary of the pros and cons for this week. So the first thing is always going to be to continue to take consistent trades. That's something that I'm always going to require. And for me to be consistent, require the higher time frame objective, a model, and an entry pattern for every single one of my trades. Before I press the button, I should be able to identify those 3 components before taking a trade, right? Second, if there's no model, even if I understand what the higher time frame objective is, if I know what the order flow is, but I don't have a model, then I can't take a trade. There's no point for me to, right? That goes against what it means to be a consistent human being in general, right? Because I require these 3 components, and if there's no model, I can't take the trade. I must have a model for me to align myself with the higher time frame objective for me to take a trade. Third, utilize SMT before and during a trade. So before a trade, if there is no SMT, then if there is SMT before a trade, then there's going to be a lower chance of me actually pressing the button because there's SMT. But utilizing SMT during a trade is like, if ES has taken out its high and NQ hasn't, so there's SMT during a trade, then I can't continue to take it, right? I have to move stops to break even. And I think that's pretty much it. So I've covered the pros and cons. I gave you guys a morning objective, and we did complete the morning objective. Coming into the afternoon session though, you're going to want to use the 6-hour time frame. So in about 2 hours or so, the 6-hour candle is going to close, right? With a new 6-hour candle, what does that mean? That means that there's going to be a new objective. So you could either target the 6-hour high or the 6-hour low and use that to your advantage. Same thing here with the 10-hour time frame. The 10-hour time frame is going to close in 4 hours. Wait 4 hours. Once that 10-hour candle closes, you can either target the 10-hour low, 10-hour high. And yeah, I mean, that's pretty much all I have for today. Economic state of the world, I don't know. Debt has been like on my mind for a while now, and it looks like we are spending more money on paying back interest government spending wise, than we spend on healthcare, Medicare, national defense, and in education, transportation, right? That's not good. You don't want to be spending a lot of your money towards paying back debt, and not even debt, but just the debt interest. And yeah, 14% of our total spending goes to net interest, which isn't ideal. Yeah, so that's gonna wrap it up for today's live stream. I'm so sorry for if I get copyrighted. That's not me. But yeah, enjoy you guys' day. Until next time.